Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for joining us for another great episode. Now, if this is your first time checking out this show, be sure to hit that subscribe button so you don't miss an episode. And if you're a returning listener, let us know what you love about the show. Leave us a rating and review. Now, today we're going to be talking to Jake Wiley. Jake Wiley is an entrepreneur, CPA, former CFO, and real estate investor. Now, he was the founder of Solar Inverted LLC, a Louisiana-based residential solar finance and installation company, which was later acquired by Palmetto Group, where Jake led strategic innovations and initiatives until late 2018. Now, he has a diverse experience in the industry, and he is the host of the Limited Partner podcast. Welcome to the show, Jake Wiley.
Well, John, thank you so much for having me. I'm really excited to get in this conversation.
Absolutely, Jake. I went over your bio at a very high level. Why don't you take 2 minutes and fill in some of those gaps?
Yeah, I'd love to. So, as you think about going back, I've been investing for 16 years now. It's been an interesting journey. I was actually kind of pushed into real estate originally. I worked for a CPA firm. And there's all these independence rules and you got to get everything pre-cleared. So the one thing that was never an issue was real estate, right? So I picked up the book, Rich Dad, Poor Dad, amongst a bunch of others. And I was like, hey, I can do this. This is great. This is how I'm going to build up my wealth and my passive income and all those great things. So started investing really right out of school, got into some single family. 2006, 2007, the market was on the upswing. Like buying real estate was a lot of fun. There's a lot of people in the market. I actually left to go do it full time in 2009. So if you guys can think back, those of you that are out there that have been around for a while, 2009 was an interesting time to get into the real estate game because it was really full swing of the Great Recession. And I always took the adage, when there's blood in the streets, it's time to get in, right? And in the real estate market, there was blood all over the streets in 2009. So buying was great. They changed the rules on us, right? So we were buying, we were doing that BRR kind of philosophy before it became a thing. And we were buying, renovating, putting these things out as rentals and refinancing and then keep moving to the next. And really the off taker on a lot of those projects were, Fannie Mae, Freddie Mac. In 2009, 2010, they came out and said, hey, we're going to change it. You can only have 5 per social security number. And we'd already gone right past that. So we are all of a sudden our cash flow, was just completely dried up, or really our financing sources were completely dried up. And I said, okay, well, I'm doing this full time. I got to keep going. So I started raising money privately. So I've learned, how to approach investors. We were doing wholesaling, we were doing flips, and flips became a great property for us because, coming back, start thinking early 2010 through the mid-teens. I mean, real estate was just going up, right? It hit the bottom and it was kind of on its way up. We were doing great jobs. Like we're making a ton of equity. Like all of my real net value, right, is tied into real estate. But, I think kind of fast forward to today, one of the lessons that I've learned and is really kind of my new philosophy is that it was an additional job for me, right? It was a lot of work. There's a lot of risk. My credit was on the line. Toilets, tenants, trash, termites, you name it, like all the big T's, like they were coming at me. Was actually changing plans, or was afraid to go on vacation because I had all these rental properties out there with people in it. And I was like, I know as soon as we get out of here, they're going to call us and there's nothing I can do about it. I'm going to have to turn around and come back. So, kind of fast forward to today, I'm now really focused on being a limited partner. And the reason what a limited partner is a passive investor in real estate. And generally it's in commercial, it's a larger portfolio of assets or it's like an apartment like you would see out there on the side of the road where groups of people like myself, John, like you, would get together, we pool our money together, we go get a loan on the property, and now we are the owners. But as a limited partner, I'm hands off, right? No longer is somebody going to call me about, we've got a problem with a tenant, we've got issues, you got to come back out here. And it's a big mental shift for me, right? Because I have been doing the active side for so long that, we're good at it. We knew how to put tenants in properties. We knew how to do renovations, but it's a lot of work. And, when you really think about the best value for your time, As a professional, I've owned businesses. Like that's been great for me. I've sold businesses. I've been the CFO of a renewable energy company. There's a lot of income that I can bring in that it started to become a trade-off, right? So it was like, well, how can I be the best me? And really kind of shifting my emphasis over into being a passive investor as opposed to getting into more and larger active investments really became the path for me. And I think that the other thing that I've learned along the way is that most people don't even know that's really an avenue for them, right? They think if I'm going to get into real estate, I got to go buy a property. My uncle's bought a property and he's, seems to be doing well and he's got all these rental properties out there. And the reality is that there are people, John, I mean, you do this, that are really good at owning and operating large properties. And I can just jump on with you and I can say, you go do your thing. I've got some money. Let's put it to work. And honestly, I'm seeing the same returns as if I did it myself, if not better. And guess what? I didn't have to do anything for it. Now, I'm sure we'll get into this in a little bit. Like there is a caveat, like you can't just jump in and throw your money at anybody and hope for the best. Like there is a process, there is diligence on the front side to find the right people to work with. But it's so powerful when you find out that you don't actually have to like trade time for dollars anymore. And really a lot of that stuff where, you're trading time for very low dollar work. And it was a lot of time out of my hands and like really out of my life and things that I avoided doing because I was afraid to actually go do them. So John, that's kind of my story in 3 probably minutes.
Well, Jake, I mean, good stuff though, right? You talked about, having that background as a CPA and really being somewhat constricted with what kind of, or I should say restricted with the kind of deals you can invest in, because as I know from my wife being a CPA and working for, large consulting firms, they have limitations on the kind of deals you can do. Stocks are usually highly scrutinized, but they don't want any kind of insider trading and stuff like that. So real estate is one of those things that you can't typically go into. So completely understand why you started to look more into real estate. And you talked about getting it started in 2009, where there was blood in the streets and opportunities were, abound everywhere. So you invest in, you are using kind of agency debt, Freddie and Freddie loans, and then you realize they changed the rules, and now they have a cap on how many of those loans you can have at one time. So now you have to change your strategy. You start, working with investors, raising capital from them, you're wholesaling deals, you're really active in all of this. And at one point you realize, you know what, I'm doing a lot of work here, and I really think there's another path. And you ultimately end up going to more of a passive investing strategy. Let's go there, because the story is consistent with one I hear from a lot of people. They started off active, we're doing a bunch of deals, or doing a lot of stuff, and they realized that this was more of a second job than this passive investment that they were expecting it to be. So talk to me more about that. And what was the moment you realized that you wanted to or needed to make that pivot to go from being an active investor to a passive investor?
Yeah, I think that's a really great question. And it took a lot of time, right? And it's an internal dialogue that I work with a lot, right? Is like I said, we're good at it. Like we're good at this. We could do it. But, when you think back to the wealthiest people, the people that have the most assets working for them, like they're not out there swinging hammers or doing the work, right? Like they're just not, because like everybody has that same 24 hours in their day, and they're not way faster than, it's a linear scale, right? You can only do so much more. And like personally, we had reached the point, and then when I say we, that's my wife and I, like we'd reached the point where we were full. Right? Like I couldn't take on any more projects. So it's like one kicked off, like we could pull one in. But it was kind of that moment where I sat down with myself and was like, what do I want? Like if I look forward into the future, I've got 4 kids. Like, what do I want my day to look like? And it was kind of one of those moments in time where you realize like, I don't want to be on call running around. I don't want to be like looking over here and picking up tile and mixing grout and like trying to figure out the right colors, paint swats, and like all of the things that just suck your time, and like taking the phone calls when you got a contractor that ran out of something. You got to get it before they go off to some other job. And it was, I didn't want that. Right. And like the honest to goodness truth was, what I wanted was a job where I could, invest my money. Like we've done well in this, and kind of take a step back and then think about like when I do want to work, when I want to, generate income with my two hands and the two hands that I've got, like what's the best value that I can get from it? And it surely wasn't running to Lowe's 12 times a day. Like that's one thing. It wasn't, plunging toilets on the weekends and missing vacations. And I think when I really sat down and I thought about this long and hard, I realized like, that's not what I want. So how do I get to what I want? And ultimately I look back and I thought about all the people that I knew that, have the big houses on the water here in Charleston and, they're not doing that. They're investing, right? They're putting their money in great investments and, they're seeing the fruits of their labor's return. And then the things that they are spending their time on are the things that they want to spend their time on and are going to be the highest return. So that was it for me, right? We really came to a crossroads that said, sometimes you got to stop doing what you're good at to do what you really want. And it's a hard pivot, right? And over the past 2 years, we've sold off all of our active investments, right? We've still got one, but that was the plan. And like we made a hard pivot and we said, we've got to figure out how we're going to get there. And it's not what I call like a stutter step, right? It's like, well, when I get to this, then I can do that, right? It was actually a hard turn to say like, look, I want to be a limited partner. I want to be a passive investor. I want to meet great people like you that are out there that are doing this well and empower you, right? Like that's the sign of a great leader anyway. Like find people that are great at what they do and turn it over to them.
Yeah. And Jake, it sounds like you were pretty hands-on. Were you like, when we say active, there's active, but there's a property manager that you manage. And then there's active, like you said, you're physically the person plunging the toilets and physically going to Lowe's and Home Depot or whatever to get materials. Were you hands-on from that perspective, or was it just something where you kind of had a property manager that you were overseeing?
Yeah, no, it's an interesting question too, because like when you have onesie twosie properties, like your property manager just collects your rent and then they call you when they have an issue. So most times, like if you're really
say that again. I want to make sure everybody in the back heard that.
When you're doing onesie twosie deals, houses, singles, doubles, and your property manager, like they may have all the great intentions, but they're just collecting your rent and taking a fee and sending you the money. The tenants call them and they call you immediately with the problem. They just dump it on you. Like when you get into the larger scale stuff, you've got, property management, professional property management on site. You've got a budget for like, hey, yeah, we know hot water heaters are going to break. We know there's going to be plumbing issues. That's all part of the plan. That's all part of the budget. Like activate it. Like at the end of the month, like we'll see if we're off on our financials. But it's, for us with doing these things, like if property manager's like, oh yeah, well, it's Saturday. We get back to the office on Monday. It's like, well, a tenant can't be sitting there without air conditioning, or, they've got a problem with their plumbing. Like somebody's got to go fix it, and it ends up being you.
Yeah, I just think it's great points there because, the fallacy that people are sold typically is, well, just hire a property manager. And there you go, problem solved. But to your point, they're great at collecting rent. Well, I shouldn't say they're great at, but it's easy to collect rent. If you run into delinquency issues, that's something else. But collecting rent is one thing. Actually managing the property and overseeing the challenges that can arise and dealing with these turmoil situations, that takes more patience, more training, more experience. And the person who's managing, 1 unit or 2 units, they may not have that capacity. So just hiring a property manager may not be the solution that many newer investors hope that it can be. So you're still going to be somewhat active, even in a deal where you have property managers in place. Let's talk about, that transition. You started to get into this notion of, if you have these onesie twosies type properties, you're being more hands-on, but the larger properties, well, now you've got professional management in place. There's some other benefits that come from investing in larger properties. Talk to us about those.
Well, yeah, I mean, I think when you get into larger properties, there's just an economy of scale, right? Like you can have a professional property manager handling, a 50-unit apartment complex. You could have somebody on site when you get to 100 units. You've got somebody dealing with leases. You've got somebody handling all of the maintenance issues. And then, even taking a big step back for me as the passive investor, like that's not even really my responsibility. At no point am I supposed to jump in if there's a property issue. Like if you are the syndicator or the general partner, you're not calling me and asking me about my opinion on like, how do we deal with these things? I've already vetted you and I think that like you've got this under control. But there's, all these economies of scale that just come with size that you just can't get in residential. And the other thing that I think is important to point out too is that the way the loans are set up. So anything 4 units and below, right? That's residential, right? So that's something that you got to think about. So when you go to sell a property, like I'm sure you'll lead me into this value add conversation, which I think is just so powerful. But you go to sell a property, it doesn't matter how well you've run it. It doesn't matter like what kind of income you generated from it. They're going to turn around and look in the market and be like, well, what are the comparable sales? And that could have nothing to do with how you treat your property like a business. It just has to do with like, how's the market been? And granted, for the past couple of years, it's been great. But in a go forward basis, when you think about commercial, it's all about like, how efficient are you at running your property? What kind of income are you bringing in? And how can you drive that NOI up and really bring your costs down? And like, there's so much power there.
No, great points right there. I mean, when you talk about the way these properties are valued, being able to force appreciation with value add, that's a huge benefit. And then as a limited partner, you're not taking on those phone calls. The operator is running all that. They're making those decisions. They're working with contractors and property management to make sure that property performs. So you really just have to make the decision with who you want to invest, the deals you want to invest in, and then you sit back and you let that person operate. For that person who was like you, active, wants to be hands-on, maybe they're in a position where they kind of know they need to be more passive. They don't really love what they're doing, but they have a problem letting go of that control. What would you say to that person?
I would, one, like I said, it's an inner monologue that I have to go through on a daily basis. It's just because I can doesn't mean I should. And when you take a step back and you think about what do you want from your investment? And it's really not the money. I know that may sound a little bit strange, but it's not about the money. What it is about what the investment is going to provide for you, right? And it's, is it going to provide you freedom? Is it going to provide you the ability to retire early? Is it going to give you the ability to travel? Like, that's what we really want, right? It's not like, how much money can I make? Now, again, there are some people out there, it's like, hey, I want to be involved and touch it. But the power of being able to leverage your investment, like, and get your time back, is how you're really going to make more money. So the money is going to be a byproduct of doing it right. And I think that, for really getting back to the point, the advice I would give somebody is take 2 steps back. Keep asking yourself, why do you want to be in real estate? Well, this is the fastest way to grow wealth. Totally agree with that. But why? What are you looking for the wealth for? I'm looking for the wealth because at some point I was like, great, that's really your answer. And that is how you need to focus your investing strategy going forward, right? It's like, don't stutter step into this. Don't think like, oh, well, I will get into active real estate and then at some point I can retire early. So no, think about how you're going to get there the fastest way possible. And then take another step back and think from an active, like from the day-to-day operations, how can you generate the most income for yourself? And it very well may not be, running around, chasing people down, looking for grout colors, picking the swatches, answering tenant calls, or like dealing with a property manager that you don't like. Those aren't the things that you want. So if you can come to terms with what you really, really want out of life, I think you'll really come to the decision that maybe becoming an active owner and, active person in real estate isn't what you're really looking for, even though that's the dream that's sold.
Yeah, I like to say it as, passive income to pursue your passions, right? So this is really what we're trying to do, is whether you want to travel, spend more time with your family, be a more present, husband, wife, father, mother, whatever it is, that's ultimately what you're trying to get right. And I love your point that it's not about the money. Obviously, we're talking about investments. So yes, it's about the money, but it's what that money affords for you. It gives you flexibility to do these other things. So you don't have to constantly exchange your hours for dollars. And that's ultimately what most people are trying to do, is get some sense of financial freedom, or at least financial flexibility, so that they have more control and options over what they do moving forward. For that person who is ready to jump in, or at least interested in learning more, how do you get started? Because a lot of people don't really know what that first step needs to be to start finding operators or exploring deals or really understanding what they should be looking for.
Yeah, that's a really great question too, because when you get into these deals, I think the first thing I want to frame up is it's like getting into a marriage, right? Like this is not like your company 401k or your stockbroker where one, you can just go sell the stocks, or two, replace like the person that you're working with and walk down the street and find somebody else. This is a long-term investment. Now the returns and the opportunity are much higher, and it's backed by something that's tangible, which is why I'll always say that real estate private equity is the fastest and safest way to grow your wealth. But you can't just jump in, kind of blind and hope for the best. Maybe let's go back 3 or 4 years. Maybe you would have gotten lucky, right? Like I just threw my money at the first person that had a good pitch. And, it turns out we made all our money back plus some, and like, it was a great experience. But the reality is that you have to do some work on the front end to, one, understand what are you getting into, right? And we'll kind of break it down in a couple of categories, but like there's real estate, there's different real estate classes, right? So there's office, right? There's industrial, there's multifamily, there's self-storage, you name that. Are you comfortable enough with the asset class that you're getting into? Then there's geography. Like, are you buying in, or are you looking to make an investment in an area where there's net in migration or out migration, right? Just because somebody found a great deal that looks great on paper compared to this one over here, there's some nuances there because, everybody's moving out of this city and into the other one. Obviously, one is going to be in higher demand. So you really need to start getting an education on, one, the asset classes, and then the geographies. I think that's just kind of an overall step one of where you start, so that you have some comfort when you start actually talking to potential operators. Are they, one, in your asset class, and two, are they in geographies that you feel comfortable with? And if you can cross those bridges, then you can start having really good conversations about specific investments. But without that, you're looking at the whole world and you're just comparing numbers on a piece of paper. And that is so risky, because there are people that can put numbers in front of you that look amazing because there's a lot of risk involved, right? So higher the risk should be the higher returns. And if you're just basing your decision off of returns, which a lot of people do, because that's what they're used to. It's used to like, hey, let me just compare and contrast like all these numbers on a piece of paper and pick a decision. That is not the way to success. So you've got to get comfortable with asset classes, and you got to get comfortable with geographies. And we can peel back the onion. There's a lot of layers here, but like that's the starting point.
I think the big takeaway there is, don't fall in love with the deal based on the return projections, right? Just because it says there's a 21% IRR, whatever, 25% or even 18, that's not the main thing you should be making a decision based on. Don't compare the 21 IRR to the 14 or 15 IRR and say, oh, well, this one's going to deliver more. Let me do this deal. There's risk involved with every investment, and you have to understand what the business plan is, and then what's that operator's ability or track record with implementing and executing that said business plan. So there are a lot of little nuances there to understand, but what I like to tell people is make sure you understand what risks are in of the deal, what could go wrong, and make sure you get good answers to those questions so you feel comfortable with how the team is structured, how they plan on mitigating those risks, and overall implementing that business plan. So really great points there. Obviously, there's a lot to learn in this space. We have our show, Multifamily Insights, to help teach other investors what to look for and how to navigate this landscape. You also have your show, The Limited Partner. Talk to us about the kind of topics you cover on The Limited Partner, and who is it specifically designed to help?
Yeah, so the Limited Partner really is born out of my own personal journey to say, like, this is where I'm going. And, I'm going to have a bunch of conversations to figure this out. And then, by the way, I'm just going to share these conversations as we go, right? Because it's a learning experience. It takes a lot of time. And you've got to have a lot of conversations to start feeling really comfortable. So that is the Limited Partner. So if you are out there, let's just say probably the person that listens to the Limited Partner the most is somebody that's in a high paying job, right? They are really successful. They're looking at the market. They probably sit across from the table from folks that are, 10X, 20X, 100X in their income that are doing deals. And they're giving them advice. And they're like, I don't understand why there's such, disparity between, the income levels on this side of the table versus that side of the table. And I don't have enough time to go figure out what they're doing, but I feel like there's something there. And the short answer is there is, right? And that is these passive investments that you probably didn't know you were even able to get into. And this is an opportunity to come learn kind of over my shoulder as I'm having the conversations that I want to have. talking to the people that I think are moving the needle in the industry and unpacking and kind of sharing this knowledge along the way. So if you're out there and you think that there might be something better in terms of an investment strategy, if you've been looking at the stock market lately and just see all the grim news, and you're looking at cryptocurrency and it's crashing, and you're like, God, there's got to be something better. And you're thinking, oh, hey, I've heard about real estate. Real estate sounds like a great option. I'm going to go buy everybody's talking about real estate. I can't go anywhere without people talking about, hey, we're buying this rental property. But there's got to be a better way that doesn't mean you're taking on a new job, especially something you're really not prepared for. So that's the journey that the limited partner is how to become a professional passive investor and do it well. And then surround yourself with a community of, one, people that are like you, that are on this learning path. And then two, listen to the people I've already talked to. John, we've had a show together. Like, there's a lot of people out there that are doing this and they're doing it well. And those are the conversations I'm having. And I'm hoping that people will come and join the community so that they can learn and meet the people that they should be meeting without starting from scratch.
Yeah, I think, Jake, the thing that stands out to me and is really important for people to understand is it's natural, because of the way people learn about real estate investing, to expect to do it yourself. Go out there and, fix and flip, or buy a rental property and be a landlord. But that's not the only path. You can absolutely invest in these larger deals. You can be a passive investor. And for many people, it's a better path because you likely have little to no experience owning or managing real estate yourself. If you have a full-time job or a career or other demands that take up a lot of your time, maybe this isn't something you want to learn or become an expert in. And your money can get easily sucked in where if you're on that loan, you are completely responsible. If that project, goes down in flames, well, you're going to have to continue to pay for it. And it's going to be a personal hit on your credit and your cash. But as a limited partner, the only money you have to lose is the money you've invested in the deal. And if you're investing in cash flowing assets, that have, large unit counts, 50 plus 100 units or more, the likelihood of that going to zero is far less likely than a single rental property. So just lots of things to consider. And I would say if anyone is looking to invest in real estate, even if you do want to be active, consider being passive first, because it gives you a chance to learn from someone who's got more experience. You can learn while you earn and watch what they're doing and understand why they're doing what they're doing, and then decide if you want to take the time and energy to do your own deal. So just another way to get into the industry. It's not the way most people do it, but it's something that I think is more attainable for the average investor who is that busy professional with a full-time W-2 job. Jake, for folks who want to learn more about you and your investments, they can check out your website, thelimitedpartner.com. Right now, we're going to go to our round of insights. Jake, give me a failure or an apparent failure that set you up for later success.
Let's see. That's a great question. So I think the failure, I even alluded to this earlier, is when I got into this and I had this business strategy where I was going to go buy properties, fix them up, rehab them, refinance them, and keep going. Like that business model, I thought I was the smartest person in the world. And then the government came in and said, oh, wait a minute. It's a lot of risk in real estate. We're going to pare that back. So one day everything's going fine. The next day my banker calls me and said, hey, look, you're already over the limit. Like they're not going to make you sell your properties, right? So like you're not in dire straits there, but we're kind of done. And so it looked like a failure, it looked like I had a business failure, but the overall success was that it forced me to turn around and go raise private money. And it forced me to go have conversations with people. It forced me to be really confident in myself. And then it also forced me to make better decisions, right? There's some things that you might be a little bit more cavalier when it's your money. But when you have somebody else that's trusting you with their money, and you really start to think about all the things that could go wrong. Now, there are some narcissists out there that would be like, hey, I'm not worried about it. But like for me, I took it so personally that it made me a much better investor going forward, because I stopped looking at deals as like a volume game. Okay, let's get to the next one. Let's get to the next one. Let's get to the next one. And it became, what's the best opportunity? What is the best thing that I can do with this money? What's the best investment, safest? Because one, you don't want to lose the money. And then two, you want to return. And that was really the lesson that I learned from like what seemed to be like a show-stopping failure, in my business model that turned into feeling very much more comfortable with the investments and really my business plan going forward.
Give me a digital or mobile resource you recommend for your business.
Here's one that maybe a lot of people don't know. So we got into short-term rentals. So airdna.com. I don't know if you've ever heard of that, but it reaches into Airbnb, VRBO, HomeAway, and all those different things. And you can look at what the short-term rental rates are for a property that's in, right around the property that you're looking to buy. And it's just a great gut check to see if that makes sense, right? So I know that's not necessarily a great tool for limited partners, but for those of you guys out there looking at short-term rentals, that has been phenomenal because you can make an offer. We made an offer on a property within 5 hours of it coming up because I was able to verify some numbers really quickly to know that I had a good investment. So AirDNA, again, it's not perfect, but at least it'll give you a good gut check.
Give me the book you've recommended or gifted the most in the last year.
Book that I've recommended or gifted the most. So there's a book, I actually have it sitting here on my desk. It is called Sell with Authority, and it's written by Stephen Wozner and Drew McClellan. Let's say, get it in there. And it's really about kind of being the authority and what that means in your space. And it's a way of kind of reframing your messaging and the way you communicate to people that help them see you as the authority that you really are, as opposed to being kind of scattershot with your opinions and thoughts and everything everywhere. So that's been a really good one for me. And I think it helps a lot of people, as we think about the Great Resignation, I think I was looking at the stats actually today, 40% of the people out there are probably going to change jobs this year. And they're out there just like, hey, I'm looking for the next opportunity. But it's like, where should you be focusing? What should you be doing? And I think, a book like this, where you really think about owning your authority spot and where your light really comes through is really powerful.
Give me a daily habit that helps you stay focused on your goals.
So I have, let's see what this thing's called. Day One. It's a journal that I have on my Mac here. And I use it every day to kind of write down, here are the things that, I'm working on that I need to move through. I've got daily tasks. I've got gratitude, all the things that I want to accomplish every day, meditate, all of that's in my Day One journal. So like, if I haven't checked it off, I know like by the end of the day that I've got some work to do. And that's made a big difference in just making sure I'm moving through all of the things that are important. And a lot of it has to do with exercise, meditating, and some of the soft skills that aren't directly related to earning money and making income. But I have found that when I do those religiously, that I am so much more successful. And I use that journal to make sure that like every day I'm checking that box.
Give me your number one insight for investing as a limited partner.
Number one insight for investing as a limited partner is that the first investment, take your time, right? There is a lot of pressure out there. When a general partner or a syndicator gets a deal, they've got 45, 60 days and they're going to be moving, and you're going to think that it is like you've got to move and time is of the essence. Take your time, ask a bunch of questions, and be willing to let deals pass by, at least on that first one, until you are really and truly comfortable. Because again, it's a marriage.
I love it. And take action. He's not saying let it pass by, but continue to educate yourself, ask questions, and get informed so that you feel more comfortable to pull the trigger when the deal is the right one for you. Let's lighten the mood a little bit, right? We've talked about being in Charleston. I want to know your favorite place to grab a bite to eat.
There is a restaurant. It's one of those, it's like a strip mall, right? It's right next to a Harris Teeter. It's on the Isle of Palms, and it's called the Long Island Cafe. And again, like it's so unassuming because it's in a strip mall, but it is hands down my favorite restaurant. And like anytime my wife are able to get out and get away by ourselves, that's where we head.
All right. The Long Island Cafe. We'll have to check that one out. Well, listen, Jake, a lot of great insights today. I appreciate you sharing kind of your journey, being in the finance space and, focusing on real estate back in 2009 when the market and the opportunities were endless. and then having kind of that pipeline cut off by the government with the loans, and then using that to be creative, starting to raise money, continue to build as an active investor, then making that transition to the passive side. And today you help other people learn to be passive with the Limited Partner. Again, if people want to check that out, you can go to thelimitedpartner.com and check out the podcast there as well. Jake, I just want to thank you again for coming on Multifamily Insights. We hope you have a great day, and we look forward to staying in touch.
Awesome, John. Thank you for having me.